the moderator of the session would be Mr. Kashyap Kompella, followed by inputs from Mr. Jeevan Gopishetty and Mr. Pinapala. So without wasting much time, let me introduce you to our panelist and my moderator for the session, Mr. Kashyap Kompella. Over to you, Kashyap, and thank you, everyone.
Thanks, Vivek, for that quick introduction. And nice to be doing this workshop with fellow entrepreneurs from the ecosystem. So it's a great opportunity. So I thank the organizers for doing a wonderful thing like this. So good afternoon to all. The context, let me set the context of what we're going to do in the next hour or so. Is it's kind of a workshop style discussion. Now we'll keep it very practical and take inputs from the entrepreneurs from the fintech space. Just a little introduction about the work I do. I come from I'm being an entrepreneur, and right now I run an incubator. So just to set the entire context right, we run an incubator called the Trade Tower, which is a university-based incubator. Unlike other incubators out there like the Y Combinator or the 500 startups. So we are based from the university, and it's an educational setup. Having said that, I think the kind of work that we do at the incubator is slightly different than that you see in most other incubators. So we kind of our vision here is to jumpstart future unicorns. And that's exactly the reason why we are kind of trying to connect the dots in the fintech space, to find the next, or to rather make a playbook for future fintech unicorns, and get the thinking of the unicorn, right? I think more than the valuation of the unicorn, it's just that touching billion lives, right, and touching billion users. That's most exciting, as an opportunity to entrepreneurs. So without further ado, I think I would, get my fellow panelists who are extremely I would say the best thought leaders in the fields, respective fields. So Anil is the CEO of Vivify India, and Vivify, is India's first credit, UPI-based credit platform. I think we learned from you, Anil, how you kind of started Vivify, and how Vivify's roadmap, in the lending space is going to be, and how you're disrupting that space. And we also have Jeevan, who runs Nemo, who's the CEO and founder of Nemo, which is basically a neo bank which is trying to disrupt the SME, rather the small and medium sector. So they are a unified banking platform, a digital banking platform for businesses. So we'll also learn from you, Jeevan, on your roadmap, and I think your growth story, rather from 0 to 1, and I think from 1 to infinity. So we'll also get that into perspective. So I'll get this kick started, by giving some context more into the landscape. I think when we talk of India's fintech, I think that the world actually kind of has deep respect for the Indian, digital ecosystem, and more so with fintech. So I was just looking into statistics, and it's almost like we had like 3.5 billion transactions on UPI, which is a phenomenal kind of achievement. If you speak of the digital inclusion, right? And so there is also the India stack, where there is a sort of a vision to get banking stacks and all the other digital stacks under one platform. And the BCG report says the entire Indian fintech industry is going to be like $160 billion by 2025. And so we have like about 2,000 plus fintech startups in the Indian ecosystem, and tons of other kind of good metrics, right? So to give some sort of I would say motivation for the future fintech entrepreneurs. So the objective, right? The discussion is kind of to blueprint like the future unicorns, which is what most of the startups, or startup entrepreneurs or founders who are just about to start are very keen to learn, right? So I would start with you, Anil, in terms of your story. I think you have been in the space for quite long now, and tell us like little about like Vivify, and then how the digital lending space is going to go forward, and the opportunities that you see in the space.
Yeah, thanks, Kalyan, for setting the stage and the kind words you spoke about us, the two of us as well. Um, in terms of just a little bit of background about Vivify and how we set up, how Vivify came into existence. Myself and my co-founder Sri, we have been in the digital lending space for the last 20 years. First as a technology solution provider, then doing digital lending for subprime consumers in the US. And that's where we kind of cut our teeth. US is the most evolved market in terms of credit, with a consumer debt to GDP ratio of 100%. So kind of explains that the market is pretty mature out there. And even in that kind of market, surprisingly, more than 40 million Americans would be underserved. And that's the opportunity we kind of chose to chase in that market. We built a fintech firm in Miami that partnered with a lender there, and eventually, in a unified entity, we built up that business to be, in a short span of 3 to 4 years, to a $250-300 million top line business. And as we were working, we built the entire backend infrastructure for that company in India. So that company had almost a 350 people operation running out of India. I was traveling back and forth, and as I was doing that, I realized that India probably built very silently, sneakily, one of the best um, ecosystems for any aspiring fintech. We have the Aadhaar infrastructure. We have
Yeah.
the credit bureaus come in, the same three credit bureaus that operate in the US, and that entire credit bureau infrastructure. And then on top of it, NPCI, who is the title sponsor, I guess, for this conference, is
Yeah.
I've used this in the past, but I'll say it again, is the disruptor in chief. I mean, they have built the most sophisticated payments platform in the world. I've been in the US lending for about 15-20 years. The ACH to clear in US takes 5 days to
Yeah.
know whether it has cleared or not. And if it has bounced, it will take even 8 days. In India, we get to know it on the same day.
Yeah.
Real-time funds transfer is a pipe dream to a certain degree in the US for most of the country. So when we saw all of this, it was a huge opportunity. And balance it with the other fact I'll tell you, which is the consumer debt to GDP in India is 10%. So you got this one fantastic infrastructure and a hugely unmet need. And that's the recipe, right? Like that's the recipe for building. Uh, Once more, I don't want to keep use unicorn as a word to talk about valuation, because unicorn has a very valuation specific term that we use,
Yeah.
but it's an opportunity specific term that in my mind, it's
Yeah.
to your point, it's
Um, I think we lost connection there.
yeah.
Yeah.
I'm sorry, I'm back. Can you hear me now?
Yes. Yes.
So, so that's what we saw as an opportunity, and we kind of went after it and the focus for us was not the prime, the super prime, or or even to a certain degree the near prime. We wanted to offer services to consumers who are really below prime and low incomes, consumers who did not have access to credit. Our Indian government in the last 10 to 15 years, apart from building this infrastructure, also had a mindset of financial inclusion with Jan Dhan and everything else, people having bank accounts. And we wanted to touch lives of people with low incomes, 30,000 rupee income, 20,000 rupee income. And that's where there is a huge unmet need. We have 700 million people with a smartphone. About
Yeah.
400 million of them have an income below 30,000. And if you go to any bank or most traditional banks, their cutoff for their income will be like 20 or 30,000, before which they'll not even consider you. And you have this large swath of population that is being addressed by only unlicensed lenders, or they're leaning on their friends and family. And that's where we thought we can solve the problem. And the reason I kind of gave this elaborate lay of the land with what we are doing kind of a story is to, once more kind of trying into the theme, is when you are trying to solve the problem, the problem you might be solving might be really small, but the scale of it is, if it's really large, that's a good way to solve it. And
Absolutely.
and that's what, as a aspiring entrepreneur, or even, I mean, even anyone who is in the world of entrepreneurship already, I mean, that's always a good status check to have. If you are trying to build a company, how many lives is going to touch, especially if you're an Indian entrepreneur, because it's not necessarily if you're sitting in US or Hong Kong and you're trying to solve some other problem, may not be the right one. But in India, we have this large opportunity of so many young people. We are a country with almost 500 million people who are below 20 years old. So those are the kinds of opportunities that we need to look for to build. As once more, as I said, I'll use the unicorn term very loosely here, is to touch as many lives as you can and make a meaningful difference, so that you're bringing them into, in our case, formal institutional credit. And I'll let Jeevan kind of chip in and give his take.
Yeah, Jeevan, I have a question for you, maybe a different one, in line with another interesting statistic, right? Which is probably, I think, a direction that Nemo is trying to take. There's a stat that the cash to GDP ratio of India has actually increased in 2021. Very counterintuitive to what people would otherwise think, because there's a lot of digital banking and digital payments, with tons of people who have come in. Like, I think India now has 64 unicorns, just to get a number. And 26 of them were just in this year, in 2021. And I think 50% of them are fintech. I think close to 40 to 50% are fintech, or allied industries like e-commerce and B2B commerce. So in that context, right, I think the cash circulation seemed to have increased, right? And so in terms of you positioning yourself as a neobank, right, and trying to kind of be a unified platform for businesses. So how are you looking at kind of this game? Because I think still there's a lot of work to be done to digitize the business transactions in India, right?
Yeah, that's true. Yeah. Thanks, Kashyap and Anil. I think what Anil has done is he's nicely laid out the infrastructure that we have today, and it makes my job easy so that I can just build upon it. I think a quick introduction. I think as Kashyap has briefly said, we're building a neobank. What essentially neobank is, you have these traditional banks. On top of them, we're building a very nice layer. Anil talked more on the side of the infrastructure, how things are changing, how the fintech landscape is changing. I will take a turn to talk about on the customer side, what are the things that are changing? How is the customer experience sort of changing and evolving? And I'll sort of build upon that on how and what we're doing at Nemo. So if you see, the way you order food today has changed quite significantly, like what you would have done 15 years ago, before the Swiggies and Zomatos have come in. Similarly, the way you do transportation, the way you do logistics, the way you do healthcare, education, all this has significantly changed. Now, on that sort of a note, how about banking? What has happened with banking? Yes, I think we're definitely better off than many of the other continents in terms of how we do banking. But has there been a sort of a recall for customers? Okay, this is the bank that I would always go back to. Is there that kind of a recall? I would say no, not yet, because there's a lot more to do there. So customers are asking for that kind of experience and services that banks today are not offering, and that's where we pitch in really. And what neobanks are essentially doing is, we're saying we're partnering with these existing incumbent banks, and then saying, okay, can we sort of do a kind of paradigm shift in the way we look at customer experience, and then also sort of bundle services along with it, such that it becomes so valuable to customers. It's all about embedding finance and then delivering it at the point of contact. So this is exactly what we're doing. And as Anil just said, because the infrastructure is kind of nicely laid out, and the market is sort of very prime for this sort of intervention or disruption, I think neobanks have the right player to come in and do. And on to your question about the cash to GDP, this is a bit of a news to me as well. But what I think is the employment, the way people have been employed in the last 18 months to 2 years has changed. That could be one factor that has actually caused this cash surge, in my view. Prior to that, because everything was going digital, and then everyone had this push after many things like UPA and demonetization, and then everyone went digital. But then suddenly all the hooks have been removed due to COVID, and then probably then people have started going back to the traditional methods of employing people using cash, because it has become more ad hoc than long term, which could be one of the reasons. But beyond that, I think we'll have to really dig in to understand this.
Yeah, I think I believe it's an interesting problem given the Indian consumer mindset as well, right? I think the business class in India, in terms of digitizing payments, I think it's far harder. After the demonetization as well, people thought a lot of things will happen, but it took a while to actually understand, the total kind of money that's circulating, which is white. So, this is also probably a reason why I think small and medium businesses still are out of the books. I think that could be one reason, maybe. And
That's correct.
so, yeah, in terms of, let's again go back to Anil. So I want to understand, Anil, from you, a little more about Vivify in specific, because it is actually a nice statement to say India's first, UPI based credit. So how did you kind of like do that, and like what is the landscape like today?
Yeah, I mean, see, in terms of having delivered that product, we'll have to thank our bank partner NPCI for kind of giving us the opportunity to kind of explore this area and offer a solution that was built on the most dominant digital payments platform, definitely in India, probably across the world, with the most seamless interface. So, I mean, once we're in terms of the reason we chose to go down that route is when you are trying to reach out to a lot of people and people who are consumers who are not necessarily very literate in terms of digital world. What has happened is between some of the factors like demonetization and other, UPI has become a universal tool for accessing and doing payment transactions.
Yeah.
So irrespective of the economic strata, I mean, whether you are making 3,000 rupees or whether you are making 3 lakh rupees a month, everyone uses UPI for a lot of their day-to-day needs. And when you are trying to solve for consumers who have really low incomes, you need to tailor your solution to what they already know or what they're already willing to use or already familiar using. If you are trying to bring in a new infrastructure that even if it is better, sometimes it may not work if you are trying to build something completely new or a new user experience. And as I said, with UPI, we had a very simplistic and a very simplistic and very well adopted user interface or a user experience. So we try to leverage that and try to build solutions on that, because when you're trying to reach so many people, it's very important to do it in a fashion that they understand. So that's what spurred us to do FlexPay, and we have had a tremendous amount of traction with it, and we truly believe we have been able to bring. At this time, tens of thousands to maybe hundreds of thousands of consumers, which we hope in the near future will be millions and tens of millions of consumers into formal institutional credit. Because when you are a digital lender and you are able to offer credit from as low as 500 rupees
Yeah.
to as high as whatever, like 3 lakhs, the 2 lakh rupees that we do, it changes the ball game. Like if you are able, as an institutional lender, when you are able to do a 500 rupee loan to a consumer who was never touched by credit, that's a game changer. And we chose UPI because it was the most dominant platform available to choose. And but the problem we are solving, because we are always focused on the consumer, we are, eventually the medium we choose is just based on various other factors. as an entrepreneur, as a company, we are always focused on whom we are solving the problem for. And that is clear for us. The few 100 million for all earning incomes below 30,000 is what we are trying to solve for. And on top of it, what we also wanted to do beyond what we have implemented so far is to kind of extend the offerings wherein the transactions that they're doing with the SMEs that you talked about are a lot of these transactions happen at our Kirana stores, at merchants who are for the
Yeah.
first time accepting digital payments. And traditionally, we all know very well, having lived in this country, that they were the traditional source of credit, right? They are accepting all the credit risk. The merchant, the Kirana merchant, was always taking the credit risk because they were the ones who were running the kata. And with our approach, what we want to do is we want to let the Kirana merchant do what he does best, which is to sell goods and services to the end consumer, and we take the credit risk away from them. So, and when that's the kind of value proposition that we are building with FlexPay. And since we had good adoption with the consumer side of it, now we are building the infrastructure to have the merchant side adoption. And when we kind of get to a scale there, I think that's when the accelerated growth will happen.
Okay. Nice. Yeah, I think solving the problem for consumers is the key, right? I think offloading that risk for people, right? I think to get credit, I think that's probably the reason why people would love, approaching, a lending provider, right? So in terms of, I think we'll get to the landscape of lending in a while. There are a couple of questions from the audience, which probably are more aligned to Jeevan's, business which is running. So one is like, I think we've seen this question a couple of times, Jeevan, even in the last discussion we had. So it's an interesting question though. So someone asked like, how ready are traditional banks for partnering with neobanks? So I think you already kind of have a kind of an association with ICICI that you're working with. So you can probably throw some light on like how you can partner with banks as a neobank.
Yeah, sure. So there's a couple of things. I think, of course, the discussion is about unicorns and how we do it. So one sort of main element of how you build a unicorn is, can you create an innovation or a change that is massively disruptive? When I say massive, it means, can you do it at a scale that touches a large audience in a short time? What gives you that leverage is technology today. Imagine doing this 20, 30 years ago, where you're going and then building this infrastructure physically and then delivering change and then taking a feedback and then giving it back, making those changes. Now today you have technology at your sort of, I would say, fingertips, and then you have these control knobs nicely in your hands, and then you take a constant feedback loop and then fix issues along the way. Now this is the kind of leverage that tech brings. This is what Nemo brings to bank consumers, where we are building this nice layer on top of banks. The question is, how are banks ready for this? I think banks are very ready, in India at least. While, for example, 2 years ago when we were sort of ideating and then we went and just spoke to 6 banks, and all the banks were saying, this is interesting, let's do it. I have not seen one bank who just said, okay, no, this is not for us. So they were all open, of which I would say ICICI was more open than anyone else. And then we kind of liked the energy and the sort of synergy that we built very early on. And then we said, okay, this is the right bank we choose. And then we went to build. Now, there are 2 parts to how we operate with banks. The first is the core banking, which forms your core banking layers, your security, your money deposits, and all that to do with the core infrastructure, which is still in the bank's hold. Now, but then what they've done nicely, they've opened the APIs, which simply is like these threads that they said, okay, you take these and then do what you would like to do with them. And this is where we built a layer around the core banking APIs. And then we are now sort of understanding customers and then sort of iterating on top of that to kind of create better experience. So that's the sort of synergy that we have started building with the banking ecosystem. Today we are with ICICI, and some of our competitors like Open and Razorpay, they have started with more banks than just one. So it is a very sort of a prime time for neobanks to come in and then do things.
Right. Yeah. So I think it's good to know that it's fairly, it was an easier experience. I think now because of other neobanks in the competition, I don't know how easy is it to get, because I think a bank would not partner with say more than two or three other neobanks, because for each, I think the reason why there is a sort of neobanking need is I think you're addressing very key problems that the main banks are probably unable to address, and that's a niche, right? And I think the whole the idea of a startup, where
Yeah.
innovation comes is to identify and pick up that niche that can scale and be a
That's
problem for a wider set of audience. So yeah.
I'd like to add a point there. So when you're building a neobank, what you're essentially saying is we will improve things for your customers, right? Now, who are the customers of bank? There are two kinds of ones. One's the retail consumer, which is like people who have
Correct. Yeah.
salaried employees, and then these businesses, right? Now,
Yeah.
with businesses, the problem gets so much more interesting because of the wide spectrum of business needs that they have, from banking to accounting to credit to compliances, and they're sort of struggling with these so many problems with very little resources. And then the real value for neobanks is there, in my view. I mean, people could argue that retail consumers are more valuable, but to me, I think retail consumers is a sorted space for banks. They know how to sort of manage that. But for when it comes to business customers, I think banks need help. I mean, in a way, so they need partners like us to kind of be the innovation arms for them to trigger those changes that they want to do.
Yeah. So there's another question probably which is more, I think more apt for Anil's line of business. So in terms of like how do you see like fintechs and banks? Do you see there's a sort of competition, and because especially in the lending space, right? Are you kind of afraid of something in terms of in the future that there could be sort of cannibalization, or maybe after a point would there be like a real growth metrics, or is there like for example, I think just to articulate it a little better, so you have like landscape where you have people like lending cart and money tap. You have off business now, which is a latest unicorn in the of course in the SME lending space. So lending is a very, I think, a broad term, but I think if you're as Jeevan also said, there's a lot to do in the SME segment. You said you're consumer focused, right? In your case, are you only focused on the end consumer, or you're also looking at lending at a wider angle at SME also?
Yeah, I'll kind of take off from a point that Jeevan said, referring to the
Yeah.
bank itself. He was saying that the retail consumer side of the bank business is pretty sorted, which is, I think, a fairly true statement, but for lending. See, if you look at the
Yeah.
formal lending landscape in India, there are 200 million people with a credit score, 100 million people with access to institutional credit. There are, for a country of this size, there are 55 million people with a credit card. Uh, and so, I mean, the opportunity on lending, and while we are mainly focused on consumer lending, is across the board. Both on the SME side, it is the business. I mean, the lending needs are pretty underserved, and definitely on the consumer side, beyond the top 80, 100 million people, for a country of 1.2 billion people, it's really underserved. So. See, do the banks have the appetite today to come into the space that most of the fintechs are are trying to play into? I don't think so, because the fintechs which are doing balance sheet lending, like the ones like ourselves, we are focused on a slightly different consumer than the bank is willing to service to. Because the bank's cost of operation and the bank's cost of acquisition and servicing do not, I mean, today they are not set up to service a consumer who is doing a 5,000 rupee loan and could be repaying it over a 3-year period. The bank's
Yeah.
economics just will not allow them to be successful with that consumer. So, but if you are a lending partner to the bank, people who are in the what do you call as the application and the origination side of it, helping loan aggregation, loan comparison. Now, you are a little more at risk because each bank is trying to build its own digital acquisition infrastructure. So you would have challenges there. But at the same time, if you are able to have a good play where the consumer can see value beyond the loan, then you always have a winning proposition. So I think it's so early stage in India in terms of lending, digital lending, and fintech lending, that the opportunity is so huge that I see banks and fintech partners, whether at balance sheet lending or on service provider side, there is still a huge scope for just partnering and working together. And once you become of scale, then you get into a different conversation, right? Like people want to build scale, then you start to become acquisition targets and others. So I think the next 5 to 10, maybe 10 years, I don't know, that's too long a time frame, but at least for the next 5 years, I think there is more to be a collaborative, competitive environment than a pure competitive environment where the banks are going to just eat up these smaller fintechs.
Well, yeah, I think I think there's one more question. So, do you see? I think you already kind of partly answered it. So, do you see some threat or competition from the banks in the lending space? To be very specific.
Yeah. I mean, banks are continuously innovating, right? Like because every bank today has a digital acquisition platform. So maybe what COVID did is, what would have happened with the banks in a 5 year time frame? It
Yeah.
accelerated it. Like so,
Hmm.
every bank today, if you are in a about 2 lakh rupee loan segment, is your competition, because they themselves are trying to get that consumer.
Yeah.
So if you're looking at acquisition costs across the board are going up, because what used to be a non-bank competitive environment, now with banks coming and trying to get the same consumer, your opportunity to get that consumer starts to get reduced. So yeah, definitely banks are making foray, and this is where you need to have some sort of a competitive advantage, some sort of a layer where the bank still thinks that it's not profitable for me to today to touch. But maybe 1 month, 1 year, or 2 year down the line, they will be all there. So then it is almost becoming more difficult, because and Jeevan can speak to this, because the Indian banks have built some fantastic infrastructure with their APIs and everything else. So to extend them to the end consumer is very easy. So as fintechs, we're always trying to interface between the bank and the consumer. Unless you have a clear value proposition, there is chance that you may just become irrelevant.
True. I think that definitely makes sense. So, in that context, right, I think just to kind of draw some inferences in terms of the key opportunities, I think while you said there's still a lot to be done, right? So, if you were like any advice for startups that would, start working on some areas, some of the key areas that you would probably like an investor, if you were wearing the hat of an investor, so, what would your top three, problems be in the space that you would be very interested to kind of advise, or just give a word of advice to early stage founders?
Are you directing it at me or Jeevan?
It's for both of you. Jeevan probably can start, and you can follow.
Yeah,
Yeah.
is it you want us to talk in fintech or outside fintech as well?
In fintech, very specific to fintech, because yeah, that's the scope of our discussion.
Sure.
So, yeah.
Sure. I think banking, as said, is just getting started. There's absolutely so much to do in banking, in your banking. As I said, we just started touching the tip of the iceberg, and we realized there is so much more opportunity. Secondly, again, as payments and lending, those two areas both have immense scope. Now we have come a far way so far in being able to change the way we are doing lending and payments. But then there's so much more to do. If you speak to some of these phone pays and Bharat pays, they'll tell you exactly what they mean by saying, when they say that there's opportunity on the table. But I think one thing I would sort of suggest to startups who are working on payments and lending, for that matter, is that the bottom lines, right? The top lines are great because you have the reach, you use tech. The top lines you probably will achieve. But is there something that you could do disruptively, come up with these ideas, and when in the beginning, that could also address your bottom line problems from the very beginning? Technology, of course, has immensely changed the way it has cut the customer acquisition costs by large scale. but then that still has not added up to your bottom lines being, quick. So that is, I think, one problem that a lot of fintechs do face, including us. In neobanks, for that matter, we work solely on the services that we deliver because banks hold the back end and we be the front end. And all that we do essentially is we kind of nicely put the services in front of the customer and then say, okay, get these services done and then pay us. Right. But then even that model is evolving, which is where we're still trying to figure out how our bottlenecks can be stable and solid. I think, yeah, those are the three things that I'd suggest.
Right. So, Anil, so how do you kind of envision this?
Yeah, I mean, I'd be partial to the business I'm in, so which is lending, and lending definitely is as I've emphasized throughout this discussion, is we're barely scratching the surface in terms of access, and so that's obviously a huge opportunity. But you have asked me to look outside and look at opportunities beyond. And one of the things we have done is obviously we have done small ticket lending, right? So similarly, there is a huge need for micro investing. So we are a savings, and I mean, in India, the attitudes are saving, but we are primarily a saving driven philosophy in terms of individual and overall economy. And I think the same consumers that we are today trying to give a 5,000 rupees loan also have 2,000 rupees to invest. And if you are able to give them an opportunity to do that methodically, giving the same, see, the experience cannot be any different, whether it is a 20 lakh rupee ticket investor or a 20,000 rupee ticket investor. The product should be available. The similar kind of product should be available. Similar kind of access to the investing environment should be available. And anyone who is trying to solve that, I mean, I'm interested to listen, and I think it's a huge opportunity because we understand these consumers and their psyche, and everyone has a balance sheet, right? Everyone has liabilities, and everyone needs assets, and the asset side of the business, we are actively, obviously we are very focused on what we are doing and we want to be focused there, but if there are others who are trying to solve this problem, I'm all ears to listen to. So those will be the two big ones, but overall I think if I'm looking beyond the consumer side of it, at an enterprise level, the areas that Jeevan and all the neobanks are trying to solve for are always a huge opportunity area. There are some SaaS related opportunities as well available there. And the other area which we touched upon is the whole SME side of the business, be it surveys, be it investing, be it lending. All of those within the SME side are a huge opportunity area too.
Right. So, I mean, just an offshoot of the same thread. I mean, just to ask you a question on digital wealth management. I think you said people obviously want to build assets, and that whole investment platforms like Robinhood that are there in the US.
Mm-hmm.
So I think compliance plays a huge role, right? In the Indian context, the SEBI governs, and private equity still cannot be done on a marketplace. So, like as an entrepreneur, is there something that like you would like to do to get the investment driven marketplaces and platforms, so that micro investments, right? Probably if somebody wants to do a 10,000 rupee investment and participate in a crowdfunding or things like that, you cannot do it right now, as I understand, in the Indian context. So so much is happening in the US, like Kickstarter. There are so many crowdfunding platforms purely that drive innovation. So I think one angle in fintech that I always kind of personally feel that India should have is building that ecosystem where people can sort of be part of the private equity as individuals, not just those angel investors who have huge wealth, but employees or anybody who generally wants to get into the investment, right? That is one probable area that we can do something in the compliance, right? So any comments on that?
See, I mean, anytime you are in regulated space and dealing with people's funds, either on the lending side or on the investing side, compliance is important. And but with our regulator, with RBI, we have probably one of the world's most pro-business, advanced, sophisticated regulators who kind of adopt technology. So I think compliance should not be seen as a deterrent to offer services. In some ways, I also believe that if you are able to build a compliant solution, whatever is the law of the land at that time, if you're able to build a digital infrastructure to deliver it under that framework, that becomes your competitive advantage. It becomes an entry barrier. So I always see anything which is heavily compliance related as an opportunity area, and that's where you should see it as. And in terms of whether it's crowdfunding or others, obviously you've stated very well that it's a great area to be if you're an entrepreneur, to kind of give access to people who have less than 1 lakh rupees to invest to that kind of investing environment is a huge opportunity. But what I was specifically referring to was not just private equity. I was talking about consumers who have very low amount of savings, maybe 10,000 rupees, 20,000 rupees a year, but giving them access to insurance products, giving them access to stocks and others, so that that 10,000 rupees can multiply in wealth for them. And both of them come with heavy compliance and regulatory requirements. And the other thing, we also, as a part of building a heavily regulated business in India, what we have realized is as long as you keep an open channel with the regulator and are able to communicate and explain transparently what you're doing, the regulator is willing to listen. So if anyone's trying to solve any of these problems, be it NPCI, be it RBI, everyone, they're all trying to collaborate and trying to improve the access to the 1.3 billion Indians of all kinds of financial services. So we should, because then compliance is a very important part of all of this. In fact, I would say the compliance layer in India, especially from data privacy and everything, at a consumer end, needs to be even more tightened. So I think everyone should see this as an opportunity to build businesses around.
Yeah, I think great sort of thing. As you said, wherever there is a tight kind of compliance, there's a great opportunity. I think this also was the case with blockchain in the very initial days. Now the government has a special committee and there is a lot of awareness. So sometimes I think rising awareness will happen over a period of time. I think somebody asked a question on traditional banking system, like how long would it take to adapt to crypto, cryptocurrency and. So, would you like to comment on that, Jeevan?
Absolutely. I love that question. If you look at how banks have been operating of late, they've been kind of looking at neobanks for the way forward. And having said that, if you look at what European neobanks are doing, they've already introduced crypto to their customers. Now, one of the things that we are very excited and working on is building blockchain into Nemo as well over the next few months. And then eventually we will move to introducing currencies such as crypto over the blockchain that we're building for, especially for the freelancer market. We're coming up with this smart contracts, which is going to be blockchain layered, and then hopefully we'll introduce crypto, maybe the first to do so in a new banking environment. But yeah, having said that, the time frame for that would I think depend on how soon new banks actually buckle up and then show the way. Yeah.
So there's another question, follow-up question. I think somebody else asked in terms of the scope of neobanks, as both Anil and you have emphasized on it. So so far, what have been these challenges that are holding back the MSMEs from achieving their full potential, and where do you think neobanks can actually play a role there?
Absolutely, I think that's a great question. So if you look at the problems or the fundamental issues that businesses have today are, first is the demand problem. I mean, if you have a business, you want constant demand, right? And then secondly is the capital problem, like the working capital problem. Once you have an order, how do you service it? Right? You need capital to be able to run operations, maybe production for that matter, have pay employees and all of that. That becomes the operations challenge. And then thirdly is the efficiency challenge. Right? When you have the capital, when you have the demand, how efficient you are in being able to run the operations and run your whole business, right? Now, these three things today are very sort of, I would say, traditional. They have not approached these challenges in the way that technology has done for big corporations. This is exactly what we're trying to do, bring in the tools and services that large corporations have access to, and then delivering it on a single platform. Right? For example, on Nemo, what we do essentially is we said, okay, what is your life cycle of the business? You start from registering a company, then you probably open a bank account, then you start operations and then you probably need some loan, and then you need to understand how your business is performing, your cash flows tracking, all of that. What we said is, okay, we understand, okay, these are the 5-6 areas of concern for you. Let us bring them all together on a single platform and then show it to you immediately. And then also we'll also challenge, like Anil just said, compliance is a nightmare, not just for fintechs, but also for small businesses. If you look at the compliance landscape, it sort of varies across states, and then it is an absolute nightmare. I can tell you that. And then 30 to 60% of the time from our own research, we found that businesses are sort of entangled in the compliances. So we said, okay, let's also bring compliances on the platform, and then said, okay, this is a nice package for a new business or for an existing business to come and, okay, look, I need compliance. Here are the experts on Nemo. If I need loan, here are the lenders on Nemo. If I need to manage my accounts, this is where the accounting can be done. All of that nicely coupled. Now, what's more interesting is we're not just asking them to run these operations, but in the backend, we're building data for them. We're building insights for them. And we're looking carefully, we're looking at trends, and then saying, okay, this is how MSMEs in this sector are trending. These are the challenges, these are the 1, 2, 3 problems that they are facing. And then we're using the data to talk to the ecosystem partners to be able to bring better services to customers. Now, these are the challenges, as I said. Now, the adoption for such tools is the first primary, I would say, problem or bottleneck that MSMEs have. Secondly is the awareness itself. Now, people do not know that we exist today, right? But then we potentially are a good idea for them, right? And then that's the awareness challenge that we are facing, and we need to do that at a scale such that it becomes more popular. And then thirdly is the behavioral problem as well. Like, now, how do you make businesses move away from traditional methods or traditional practices to more sort of tech-driven? Again, I'm not sort of loosely using the word tech-driven, but then I actually mean it, because tech brings efficiency, and that is something that we need to realize at some point, and MSMEs more specifically need to.
Yeah. Right. Yeah. So, having said that, right, I think if you just give an ecosystem perspective, right, to what you guys are doing at at neobanking at large. So there's a lot of stakeholders that you need to bring to one place. So now I think there are an initiative from the government which just creating fintech hubs and things like that. And as obviously as a guy myself who's part of the ecosystem drive, so I run this incubator called Trade Tower. And so what are your any kind of things that you expect from an accelerator incubator in terms of having this dialogue which we are right now doing? So how do you think like stakeholders different stakeholders can regularly keep coming to one platform, synergize, and work on the bottlenecks, because ultimately that is what is needed, right? So any comment on that in terms of an ecosystem perspective?
Absolutely. I think Anil would also agree to this. Like, all fintech players today are, have a very keen eye for learning, because it is such an exciting time and there's so much opportunity on the table. Everybody is looking, okay, where is the next event? When can I go and then learn a little more? For example, I've learned from Anil today, and then from the other, speakers on the forum in the next 3 days. Now, I think all the accelerators probably should do is just write a message to them and then saying, we're organizing an event. Do you like to come? I'm sure people would love to sort of join in. And in terms of the value, I think if you can bring out a common key problem that a bunch of these fintech players are facing, addressing, and then you say, okay, this is what you're facing, let's come and have a chat. I think nobody would say no, because everybody's trying to learn, and because the market is so rapidly changing. If in the recent sort of weeks or months, there's been changes in the OCEN network, which is simply putting, it is the UPI for lending. Like, I think Anil also probably heard of this. And OCEN is going to be a big change for us. It's going to be the stack that is going to be used across fintechs for lending, and that's a game changer. Now, that is something everybody's learning. I mean, we're all hooked on who's going to give the next piece of information that will give me the competitive advantage, or just a learning from a learning standpoint.
Yeah. So any comment from you, Anil, on this? Since you're in the lending space more, what kind of stakeholders do you regularly interact, and are there some innovations that are probably going to happen in your space where you need a stakeholder involvement?
I mean, obviously there are multiple stakeholders from regulators to banks and everybody else involved. And I talked about the ecosystem and the stack that is available for us to build on. So yeah, and to Jeevan's point, the role of incubators, accelerators, or mentors, or anyone else is a pretty important one, because we are all kind of in a pretty dynamic world, right? Everything is in flux, everything is changing on a continuous basis, and everyone is building new technologies and tools to better serve the consumers. And the more we are able to collaborate, as I was talking backstage,
Yeah.
one thing COVID did is not having these opportunities to do this in person and meet 400, 500 people without mask and social distancing also would help. But unless we are able to have these collaborative opportunities to talk and think collectively on these problems, I think that's what will accelerate some of this new solution development. On a lighter note, what I've seen is everybody is asking a ton of questions on neobank. It has become definitely the flavor of the month. So congratulations on the.
Well,
And I'll tell you the other side on it, because
yeah.
when we started business 2 3 years ago, everyone was doing fintech, and then
Right.
everyone was doing lending. Now everyone is doing neobanks. I'm slightly happy that all the new aspiring entrepreneurs are now going to focus more on neobanks and less on fintech and lending.
So you will have a competitive advantage that way.
That's what I mean. I'm just picking this. This is the learning I had looking at the chat stream and the Q&A.
Well, I think you're right. I think we have ton of questions for you, Jeevan. So there's like, I think this probably is you can answer it. I think both of you could answer it. So somebody wanted to know a little more about OCN based lending. So you want to like throw some more light on it?
Yeah, I think probably Anil is the best to talk about this. This is more about the lending stack, OCEN, in fact. Right?
Yeah, it's OCN, it's Open Credit Enablement Network, and as Jeevan rightly pointed out, it is almost going to be like a UPI equivalent. I mean, it's another part to the ecosystem and the stack that is being built, and what it will do, and it's primarily a huge impact for the SME side of the business, because that's where what OCN is intending to do is bring together, organize all the disparate sources of data, and give that data to potential lenders or potential fintechs or anyone else who has a value proposition to these small and MSME businesses, and address a specific credit need or a specific service need that they have. And the way it is being built up, and once more, some of these in the first generation don't fully deliver what it intends to be, but I'm sure all the big minds that are attacking this problem, and I have been a part of some of those discussions, we are very it is going to be one of the most powerful tools that will enable SME lending and bring financial inclusion from a credit perspective to the MSME sector. Because right now, if you are running a 25 lakh rupee turnover business, to get a 3 lakh rupee loan or a 2 lakh rupee loan, if you have to put together your GST filings, if you have to put together your tax filings, if you have to put together your bank statements, and all of them have to be given as a stack of paper, which or some logins, all of that is pretty inefficient. And what OCN is going to do is organize and deliver this in a streamlined fashion to fintechs and banks themselves, so that they can make real-time credit decisions. So I mean, it's been in the pipeline for a while. It's taken a longer than expected time to see it in its final form. But once it is running for a couple of years, I'm sure we will be seeing what we've seen on the UPI side, where everyone's building solutions on it and around it to enable better lending.
Right. I think just one last thing before we probably wrap up. I think just to get your quick take on, are there any companies that you've personally seen? I think Jeevan and Anil, both of you have some exposure outside. So Anil has been like working with the US market since a long time. So any specific US company that you think will do well in India, or like any ideas from the US that we can pick up? I think a lot of stories like the Flipkarts, they were a sort of a Me Too model. So any fintechs like you see, for example, like Robinhood, as you rightly said, I think compliance we can work out. I think just a matter of time. But at top two or three picks that you have, like you've, I think, seen enough of the US market. It's like wish, like your top wishes. For example, you wish that Robinhood was in India. So any thing that comes to your mind on that?
I don't wish for any US technology or startup or fintech to come to India. I want Indian entrepreneurs to solve problems for them. So I would pass on that side of the question, but I will talk about things that are really doing well in US. Robinhood is one, which obviously,
Yeah.
I mean, we have our own Zerodha here, which kind of can evolve better into that kind of a solution. But one area, if I have to pick up one aspect or one solution provider that people should look at and try to see if they can do something like that in India, it will be someone like Chime, which is a digital bank. So what we are lacking in India, I mean, we have a lot of talk around neo banking and everything else, but the actual true digital bank infrastructure for the underserved and unserved, and that's where someone like Chime is doing great. And we also another company that does really well, and now is not a secret anymore, is SoFi. Everybody knows SoFi, but still, student debt financing in India is pretty. I mean, non-existent, non-structured. US, irrespective of whether SoFi was there or not, was one of the most evolved student financing markets, especially for higher education. And SoFi came in and brought an entire digital angle to it. And in India, it's a completely unexplored market to a large degree. So if I have to pick up two names, I would pick them up. I'm not inviting them over. I'm asking Indian entrepreneurs to solve those
Absolutely, I think
problems.
that's the spirit. The point of asking is, can we replicate some of those, right?
Yeah,
I
I
think
understand. I was just
this,
kidding when I said.
yeah, the spirit I think is to blueprint some of them. So I think it's just a playbook, because I think if some success is there, then you have to just tune it to the Indian market as well. So not everything in the US works here, but good to know. I think SoFi, and I think just to add a little more. Last week, I think there was a company from Mumbai which is also into student finance, and there are some providers who are into providing small credits to students and lending to students. So it's just picked up. I think it's nowhere closer to the US market, as you rightly said, but I think that's also a great growth driver in terms of a new domain that can come in. Right. So
As I'm talking, I'm just thinking why we are not doing more into student and education finance. There is a lot of it happening,
yeah,
uh, but if you look at, I mean, if anyone who's actually trying to solve a problem, if they look at the student lending market, which is backed by the Fed Reserve in the US, I mean, the opportunity there is huge. And
yeah,
SoFi just built a layer on that element. In India, that underlying problem itself is not properly solved. There is no wholesale lending or securitization infrastructure available. So,
yeah,
I mean, there are huge opportunities within that area on the entire student lending side.
yeah, yeah. Nice. Any comments on that, Jeevan? I mean, your takes, or I think you've been in the UK, so and I think neobanks are pretty much there seen in the UK. So, any other sector apart from neobanks in fintech that you wish you could replicate in India?
No, I think we are better, as I said, in fintech versus the world in many respects. But then there are other areas, like for example, EV is one area that we are kind of lacking. If when it comes to replication, I'm fully with Anil. Now it's the time to give back to the world of what Indian entrepreneurs can do. I mean, people should be blueprinting our models rather than we blueprinting their models. And having said that,
Yeah,
I'm a fan of European neobanks. They've done a tremendous job. But then,
yeah,
if I look at the problem in India, is very different. It offers a very different set of challenges. So it is not practically possible to sort of take that model and then copy it here. Versus that's why I think when we were thinking about Nemo, we started thinking from India first. Okay, what are Indian consumers? How do they behave? How do they think? And from there we build. So I think if you start there, I think it opens up tremendous opportunities for any new startup.
Great, fantastic, guys. I think it was a great session. Learned, I think, couple of things from you in the closing remarks. I think, Anil, student finance. I've been in the education space, so I think let's explore this. So I think since I am also currently in the education space, I think there's a lot of scope for student lending, and just like I think the US market, we can probably try. And Jeevan, I think European banking space. I think the tech stacks, especially like TrueLayer and some of the examples that you mentioned in past discussions also. I think there's something like that needed to consolidate the entire stack. Right? Today we are talking of stacks, but they're all in silos. I think if we can make a consolidation of all of this, and as Anil also mentioned, Chime, that's the experience for unserved and underserved. I think that is also a good space for blueprinting some of the Indian models, tuned to the Indian consumer needs. So thanks, Jeevan and Anil. I think it was a great conversation. So I think yeah, thank
Thanks,
you.
Kashyap.
Thank you.
You've done a good job about. It's a pretty wide-ranging topic. You have successfully kind of corralled both of us to make sure that we are staying on subject. Thanks a lot.
Thank you.
Thank you. Thank you both. Thank you.
Thank you. So this brings us to the end of our discussion. Quite an insightful one. I would like to thank Jeevan, Kashyap, and Anil for sharing their insights about the fintech sector. What are the potential it holds for us in the future? What are the challenges? Insightful for those who are starting to get into this sector, for the startups. Quite interesting questions which went answered by all three of you. So a big thank you for you for addressing those questions. So thank you, gentlemen. This brings us to the end of the discussion. With that, I would like to thank Razorpay, uh, Amazon Pay, WhatsApp, our partners Google Pay, Open Financial Technologies, and Cash Free Payments. Thank you, gentlemen. Thank you for your time. Have a good day.
Thank you.